welcome along to the Property Academy podcast. I'm your host, Ed McKnight. And today on the show, we're talking about how long do housing market downturns last, specifically in the context of New Zealand. And it's quite funny, I was catching up with Sim from Girls That Invest, which is a very popular podcast. And I said, Sim, what should we talk about on the show? Because she listens to it. She says, I want to know how long do housing market downturns last, because that's what we're currently going through. So I thought, pig and mud. I went to the zoo the other day, so I'm thinking about pigs and mud. And so now we've got all of the data. We're going to share it with you all. Now, what we need to understand is there have been probably two major housing market downturns in New Zealand history. The first happened in 1997, which is kind of in the middle of the Asian financial crisis. The second happened during the GFC in 2007, 2008. But for all of you guys watching on YouTube, I just want to show you the graph. And for everybody on the podcast, of course, we will do our best to describe it. I've taken just the last 10 years of data so we can really see this. House prices in kind of 1997 fell by about 6%, and in the GFC they fell by about 10% in total from roughly June 2007 through to around about December 2008. So the first thing that's quite interesting, Andrew, when thinking about the historic housing market downturns we've had compared to this one that we're experiencing, because they are a bit different. First of all, is that they've been pretty modest, if I'm honest, 6 to 11%. It's not massive numbers, isn't it?
No, not that big at all, really.
Whereas the current forecasts are somewhere between a 10 and 15% drop during the current downturn. So today's one might be a little bit more severe than what we'd seen previously.
Although, do you remember what the forecasting was back then?
I've read, there was 20% drops.
That's right.
Is what people were saying.
So I mean, we are a bit further down than what the last drop actually was, but maybe this time's similar in the sense that you've got a lot more bullish assumptions around what the drop is going to be than what actually eventuates.
Well, at the time of recording, we're 7.7% down from the peak, which is not as much as the GFC, but a little bit more than what we saw in the 1997 downturn. So let's dig into how long does it actually take for house prices to go from the very peak to the very trough of the market, because that might give us a sense of, well, how long might it last this time? And then we'll talk about some differences with today's downturn compared to the historic ones. Well, firstly, if we look at both New Zealand and New Zealand excluding Auckland, during the 1997 downturn, it was very quick. It only took 10 months to go from the very peak of the market, which I've actually got a table which I'll show you.
Of course you do.
I mean, it doesn't look very pretty, but I thought, I'll just show you my messy data. Then people will understand why I've got a messy room as well. It took 10 months to go from November 97 to September 98. That's how long it took, 10 months during that 1997 trough. If we look again just at New Zealand excluding Auckland, exactly the same, 10 months, which is quite quick. If you think about today, we're about 7-8 months through our drop.
Yeah.
So we're getting pretty close to that. And what about 2007, Andrew? What's that telling us? How long did it take us to get to the trough?
So New Zealand was 18 months.
Let me pull that up. Yeah, from about June 2007 through to December 2008.
Now, if we take Auckland out, it was only 10 months.
Oh, yeah, it was. It was too. Yeah, that's right. It was 10 as well. And that just shows you the kind of variation that you can have of almost 3 quarters of a year in that instance. But historically, how long have housing downturns lasted in New Zealand? Somewhere between 3 quarters and 1.5 years. So, and that's going from the very peak of the market to the very trough.
And I think it's probably important to point out that not all regions are created equally. So if we go, have you got the data there on the screen, Ed?
No.
Okay. If we look at 1997, if we look at Auckland's downturn, it was 9 months, whereas Wellington was 8 months, so pretty similar there.
But lower than the rest of the country.
Lower than the rest of the country. In 2007, really interesting. So Auckland was 16 months, so quite a lot longer. Wellington was only 6 months, really quick drop there.
And we'll talk about how long it took for the markets to recover as well. But look, interesting question for you. You would have seen the data, and obviously neither did I before we crunched it. But how do you feel about this number of months? Are they more than you would have thought? Are they less than what you would have thought?
I think that
You're about to say they're all right. They're all about what you thought.
No. I think the 18 months for New Zealand in 2007 was probably a bit longer than what I thought it was. But other than that, it's probably pretty consistent.
Now, I do have a couple of observations. Obviously, the 2007 downturn took longer to go from the peak to the trough than the earlier downturn. Now, the reason that would be is, hey, look, there was a bigger drop. So if you've got further to fall, it might take you a bit longer. But the other thing that's really interesting, and I'll just pull this up for the 2008 data, is the market actually peaked in about June 2007, but house prices didn't really start to drop until February 2008. Now, of course, I call the peak whatever the highest price was.
Yes.
But what's important to note is that for about 3/4 of a year, 8-9 months, the New Zealand property market actually stagnated during the GFC downturn before we started to see that actual drop. Now, that is one of the reasons why when you look at all of New Zealand, it appears that it took 18 months for the market to go from the peak to the bottom. But if we take out that period of stagnation and just look at where we'd see on the graph, hey, that actually looks like a drop, then we're talking about 10 months, 11 months, that even during the GFC, it took less than a year to drop 11%. Now, when we go ahead and apply that and think about today's downturn, if we look at the data, it was a very sharp drop from November 2021. So my point is we didn't have that period of stagnation in this downturn. And so that is why I would expect house prices to bottom out more quickly than what we saw in the GFC. In other words, I don't think it's going to take 18 months because they had half of that drop that I just told you, half of that 18 months was actually stagnation, just house prices pretty much leveling out. We haven't seen that here. We've seen quite a violent drop quite quickly, and that's why I think we're going to hit the bottom of the market much more quickly. So how far away are we from that bottom of the market?
Okay, so as with the existing market, so existing homes, we're probably only about 1 to 10 months away from the very bottom of the market. One thing to remember is that new builds are actually down a lot more than existing properties, and that's because it's a more responsive market, because you've got a whole bunch of developers who have bought land, they've got staff, they need to price aggressively if they want to move their projects. So they kind of have to do it. Whereas, a mum and dad or a mum and dad investor, well, they don't have to necessarily sell right now. They could just wait this market out a little bit. So what you'll typically find is that the deals to be had tend to be in the new properties because they're kind of forced to, unless they want to, mothball that project for later on. But I do think that the trough is a lot closer than people think. And I was actually just talking to some investors this morning about this. A lot of developers that we're working with, they are pricing things very aggressively to get them out of the door. Some of them are saying, actually, you know what, we're going to sit on that project. We'll just, we paid, X amount for that land. The only way we can make this viable is sell it for more than what the market will tolerate right now. And so if they park that and there aren't as many new builds coming onto the market, then there'll come a time pretty soon where the supply will meet demand.
And one thing I want you to talk about as well, Andrew, is that concept of what we call the trough territory. What is that?
So when we talk about the trough territory, no one's ever going to be able to predict where that is until after the fact. So if you're an investor going, I'm going to wait till the very bottom of the market, you're wasting your time. You're better to just get within cooey of it and then start investing.
So for us, we talk about the trough territory being about 10 to 15% below November's prices, because we can be pretty confident that that's round about the bottom of the market. Now, that's going to be about the same size drop as what we saw in the GFC. And look, if you're 1% above or 1% below, you're probably going to be pretty happy with that over a 15-year period. But let's also talk about the time it takes for a property market to recover as well. Because it's all very easy looking at some of these graphs and you see, okay, the line went down, then it went back up, and I'll show you another graph. Oh, yes, the line went down, house prices dropped, then they went up. Oh, the 2022 data, we've seen the drop. We haven't seen prices move up at some point in the future. We likely will. But how long does it take for somewhere to actually recover? Well, I'll give you some stats. In 2008 in Canterbury, it took a year and a half for the market to drop from its peak to the bottom. It took 3 years to recover. New Zealand, 1997, took 10 months to drop, 14 months to recover. Auckland, 2008, 16 months to drop, 3 years to recover. Now, what I'm just noting with this trend is you will see a very violent decrease in some instances, like we have seen from November last year to where we sit today. And I'm sure the next time we get a data export from Ryan's, we will see a further drop there. But it takes longer to recover, somewhere between a couple of extra months, maybe twice the amount of time. In Wellington, it took a lot longer than that. But just be aware that that recovery is going to be a wee bit longer than it takes for the market to drop as well. So, Andrew, if we're thinking about how long does a downturn last, let's not just think about the down and the up. Let's put it together. How long does it take for a market to go from the peak to the trough and then to recover back to the point where we see house prices back at that peak level before surging on?
So in 1997, it took 2 years. In 2008, it took a lot longer with 5 1/3 years.
That's for all of New Zealand, right?
Auckland, both times, was 4 years, give or take 3 months, and Canterbury both times was 4 or 5 years. But I think probably with Canterbury it's going to be a little bit different this time because it was so undervalued. What do you think?
Well, I think because it's currently so undervalued at that specific time, it wasn't. So I expect house prices there to be relatively resilient. But if we're thinking about, okay, it's probably going to be somewhere between 3 and 5 years to go from the peak of the market, the drop back, and then being fully recovered. Now, I think what's really important is if we really know that the drop in house prices is going to happen early in that stage, you really want to be preparing yourself for, again, that trough territory if you're the sort of investor who wants to take advantage of that. And so what I mean by that is if we say, okay, the bottom of the market is 3 months away, it's 4 months away, whatever you believe it might happen to be, if you're going to buy at that specific time and put something under contract, you probably want to get started now.
And look, so if we're 7 or 8 months into the downturn now, then, probably a ballpark of 1 to 10 months before we get to the bottom of the trough, then you're probably about 2.5 to 5 years from today until you get a full recovery.
And that's how long a downturn lasts. Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the Property Academy podcast. Really does help us get the message out to more people. And hey, if you want to build your property portfolio in 2022, then your next step is to come in for a portfolio planning session. Real easy way to set this up. Whip out your phone, send us a text. Text the word plan to 5522. We'll give you a buzz, see if it's the right fit. Thanks for listening to the Property Academy podcast. I'm your host, Evan Knight. And we're going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most out of the New Zealand property market. Until next time.